Welcome to this week's Office Hour Calls. My name is Austin Billy, the founder of the Options Auto Trader. So glad to be here with you guys today. We have George, Maria, and Vera here. Glad you guys are on the call. We, as always, go into this call. We talk about what the market's doing. We talk about what my portfolio is doing because you guys are all kind of modeling the same thing. And then we just talk about the leaderboard, if there's any takeaways from it, things like that. So let's dive into the first thing. We're going to talk about the market. Looking at the market right now, we're up almost 1% today. Last time I checked, we were up about 0.71%. So that's a very good move for the market overall. However, when we're looking at it through our overall view of the market, there's not much to talk about because we look at the market trend using our market analysis and indicator, which means we're looking at the market through math. We're not drawing trend lines that, are subjective. We're not making guesses. We're looking at it through math, which is what the market analysis indicator does for us. And so we are inside this green zone, which means the market is overall bullish. So our go-to strategy is bullish as well. Now, as you guys know, when we're inside of this zone, the market tends to stay in this zone for about 2 years. We're coming up on about a year and 2 months now that we've been inside this green zone. So I would say we have about another 6 months before we really should start considering layering on different positions, like maybe more hedges and things like that. But for now, we're good to go, completely bullish. But this has been my thought for the last 3 weeks, almost a month now, is that yes, we're overall bullish, but right now we're stuck in between two key levels. And we look at the S&P 500 from the form of ES being the futures contracts. We need to break above 7,050 if we want to see that nice push higher. We're now approaching that level. We're about 100 points below it. But if we're going to continue down, we have a greater fear that the market will continue down if it breaks 6,800. So you can see here it got very close to 6,800 at this point, but the market never closed below it. Instead, as soon as we got below it, we actually pushed back up and had a very strong green day. So we are not breaking that level yet. So those are two levels to watch. If we break 6,800 and close below it, we might see a continuation down. We'll start turning on or maybe activating some hedges early. But for now, we're stuck in this neutral zone, which for us as option sellers is very great. Data decay kicks in. There's really nothing that we need to do. So yeah, with that said, moving on to the options spot portfolio, what are we looking at? My personal account of my open trades right now are up about 1% of the overall account. So far this month, doing good, about a 1% return. Again, I like to target a 2% return, but I don't think I'll get there by the end of February. Still up about $2,395 right now. Not too bad of the open positions. For allocation wise, same allocation as usual. $65,000 of the portfolio is in option spots. 90,000 is in SGov, generating monthly revenue through a dividend. And then the rest is in cash for safety or if another opportunity presents itself. So if you're not familiar with this allocation, basically we allocate between 30 to 50% of our account into options bots. Now, why not more? Because options trading can be very risky. In case all things go to zero, we want to make sure we have the capital available to quickly recover all that we lost. And when you're using futures options, you have the power for buying power to go up dramatically in risky situations. And so we need cash set aside to be able to have money to withstand that buying power increase, which is why there's cash here. But then we might have a lot of money left. Like you can see here, I still have a lot of money left, although I'm making 3K a month or about 3.3 if you combine these together. There's still a lot of money that's not being used. And so I put this into a very liquid ETF based on treasury bonds. And that's the normal gist, but you guys know that if we've been here. So my thoughts is the best portfolio that you can create is one bullish spot that only runs in bullish markets. Make sure your entry settings are aligned for that, and a bearish spot that only runs in bearish markets, and then let it ride. Now we're looking at the leaderboard for this month so far. Our top bots are in ES12D35P. Yeah, not too familiar with the exact terminology of that, but that is Scott. That is one of our OAT Inner Circle members. You guys on here are all OAT Inner Circle members. So if you want to chat with Scott, feel free to do that. And it's not the Scott that's in here. There's another Scott. Scott, his last name starts with a B. I won't share it here. But yeah, you can reach out to him there as well. Actually, it might be that Scott. I'm pretty sure it's the other Scott, though. Scott can correct me if I'm wrong. But anyways, either way, if you want to talk to Scotts, multiple Scotts in this group, you can do that in Discord. But essentially, it's a short put. You also have the ability to You also have the ability to copy all the bots here. So not everyone has access to do that. Only you guys as Inner Circle members. You can click on this and actually copy that bot for yourself, which is good. Next one is the SPX Biweekly Rainmaker done by SG, also another one of our Inner Circle members. Strangle, again, clear why that's doing. As I mentioned, for the last month, essentially, we've been stuck inside of a range 70, 50, and 6,800. Because of those two numbers, we're just going back and forth until one of those levels break. We're going to stay flat. And so that works with any put selling strategy, which includes short puts, 1-on-1s, put credit spread. So those are still going to perform very well. However, strangles are going to perform even better because you're playing off both sides. But as soon as the market breaks either direction, those strangles are going to be in trouble. Next, the top one is from David, who's also an Inner Circle member. You guys crush it. I love that you guys are always the top ones on the board. That is an ES bullish bot 111, basically from our bot library for you guys. And so that's 12,000 for Scott, 10,000 this month for SG, and about 7,000 for David. I think David's the same David that's running the biweekly Rainmakers, 12, 13 grand, more like 14, I guess, which is awesome. So way to go, David. Tafari's also in there. Joshua's in there. That's cool. I know Joshua. Maria, also an accelerator client number 8, mid hat with his biweekly also. So you guys took, of the top 8 that I can see, you guys, there's 7. So 7 of the top 8 is Inner Circle members. So congrats on that. As always, keep your portfolio simple and then scale. So basically, if you want to follow Dave Ramsey as style, if you still have debt, pay off that debt first. Then as soon as you're done with that, which most of you guys are, I'm just clarifying here to make sure. Then what you want to do is create an option spot portfolio, one bullish spot, one bearish spot. And then if you still have time, just deploy money into it every single month. Okay. So be like, hey, every month I'm inputting $500, 1,000, 2,000, whatever it is. And you can build up that account like crazy. As you see, these people are trading with anywhere from 200 to 500,000. And some have more, but the people that I'm seeing here on the leaderboard right now, I do know their accounts. They're between 200 and 500. If you can get that account to 300, 400, look at that. You have the chance to make 5 to 10 grand a month. Again, it's going to vary based on the month. I'm not promising anything returns, but that's how crazy, how much of a return you can make using just very little amount of money and still being consistent and being profitable long-term, which is awesome. So again, set up that monthly deposit, get that going if you don't already have a large account size. For those watching, if you don't, this should be your goal. If you get to 200, 300, like that account will start going very quickly with your deposits and the growth, because on average, you're making about 20 to 30% a year, which again is almost 3 to 4x the average market. So keep that up. Anyways, that is my commentary for what it's worth, which isn't much because I don't control the market. But anyways, we've covered the market, which again, bullish market. We're stuck in between two levels. If one breaks, we'll be able to do what we want to do. Either way, in the circle members, all of you guys here, your bots are set up to adjust with the trend automatically. So there's nothing you need to change. After that, the bot portfolio is doing very well today. You guys should be up hopefully a grand, if not more, depending on account sizes. So that should be going well. It should hit some take profits here soon. Outside of that, please let me know if you have any questions inside of the webinar chat, and I'd love to answer them and get to as many as I can. If you don't have any, as always, I'll fill in time with things. And outside of that, the monthly portfolio review that I do for you guys will be out the first, basically Monday. You should get those in your email. If you don't, let me know. But basically, go through all of your accounts. I write up some notes. And then once those notes have been attached to your account, it sends out an email to you where it summarizes your bots and then includes the notes section that I put in there. So yeah, that email will be coming out on Monday. So look forward to that. Again, pretty standard. Most of you guys, if you set up our options bot portfolio system, there's no changes that need to be made. You're just letting it run, letting it go. And I'm saying that for most of you. There is a mismatch. It's typically because you've taken out funds or added funds, and so there's reallocation that needs to be made. For the most part, nobody really needs to change a thing. Sweet. Are there any other questions? We have George K. Callan. Sorry, I should not be taking that long to pronounce that name. George, Callan, Maria, Robert, Scott, and Vera. I'm so glad you guys are here. I know you guys are going to eventually ask. So yes, the brokers are in progress, hopefully sooner than later, but I've also started the progress of other things. That being working on some of the features for the options auto trader since the brokers are on pause. A couple of the brokers that I'm doing, I'm very close to finishing, but I'm waiting on some final approvals from them. So that's on pause. Since that's on pause, I'm working on some of the features that I was going to do. Just a lot of cool things. So you guys know what I'm talking about before. That will be coming down the pike here soon, and you'll be hearing about that, which is awesome. Robert did ask a question. He said, I had a GC bot that I thought I closed manually, but I didn't. It closed at a small loss over the weekend while GC was going up. Was it a wide bid ask spread? Most likely. Let's take a look though. Over the weekend, wow, just yeah, okay. If it closed out over the weekend, there's a good chance. There are a lot of protections put in place. Oops, there's a lot of protections put in place for not closing trades incorrectly. However, the hardest one to filter out is overnight trades. And so we have to look at like how much volume is going through, what's the bid ask spread, and things like that. But let's take a look. If you want to message me, I can give you the exact details because we have the logs for it. Shows exactly what happened at every minute for every bot. So if you ever have a question about something, I can look into that and tell you exactly what happened. But if we look at over the weekend, what is that? Today's the 25th, 24th, 23, so 22nd. Okay, so 20, 22. Yeah, I don't know where it closed. It could potentially have been here when volatility spiked and bid-ask spreads went wide. Potentially have been here overnight when it spiked up or spiked down with volatility being a change. Yeah, gold can the best assets to trade with by far is everything related to the S&P 500. ES for sure. MES is a no. The volume's way too low. But ES, SPY, and SPX, you're gonna have no problems, no liquidity issues. I have not seen. Most stocks, no liquidity issues because those trade during the day. The issue is futures overnight. Like I said, we have a lot of protections in place, but sometimes we do miss things here and there. But yes, I would absolutely love though, Robert, if you sent me the details so I can look into it because I can always filter in a bit further to figure out the exact details of why it went the way it did. Sunday, 7 p.m. Monday, Sunday. I don't even know how to read. Okay, 7 p.m. would be 9. I assume we're talking about EST, or at least I hope so. 7 would be 19. Okay, yeah, so right here. Yeah. So I bet because it was overnight and we had a move minus 0.35%, that the bid-ask spread widened super quickly. And that's what happened due to low volume. There was a different change there because that's exactly at 7. But like I mentioned, I want to make it better. I don't want these small things to keep happening. We filter out so many erroneous price points like every single night that we prevent against. So if you were using a normal limit order or a normal market order or things like that, like it would have got executed. So we're able to filter those out. So it's all about narrowing down the smaller ones. I'm going to make note of Robert, but I assume he's going to email me, but I'm just going to say Robert here, GC at 7 p.m. Sunday. To look into that to make like, okay, cool. Let's make sure we prevent against this scenario again. Because yeah, I don't want that happening continuously. Let's see. It was a small loss, which should have been. I agree. Yeah, this shouldn't have happened. Without a doubt, this is wrong. Should not have happened. I don't want it to happen again. Yeah, so I'm going to look into this as soon as we get off this call and make sure that we adapt for this situation. Sweet. We have Bobby, Dale, George, Callan, Maria, Robert, Scott, and Vera. Once again, glad you guys are here. If you have any questions, please put it in the chat or Q&A, and I'd love to help you guys out. If not, we can just call it and have a day. Again, it's a very good day. Nothing to do. Maria says just hanging out. Love the updates. Truly my pleasure. Glad you like these. I love that you're always here just chilling. And congrats on making it on the leaderboard, I believe. I think I saw it. You're the only Maria in this group, so I assume this is Maria. So congrats on number 7. Wow, $5,800 in a single month. That's really good. Like seriously, what's that? I'm just gonna round up to 6,000. So I'm gonna say that's 70 grand a year. You're not gonna have every month this month, obviously, but if we're just taking averages, right? Leaderboard does not include paper count though. Yeah, exactly. So one of the cool things about leaderboard is I didn't want to give a false sense of profit, false sense of hope that live trading can lead up to. That's why on the leaderboard, we only look at live accounts that we've actually done brokers, like that we've actually initiated the broker open and close for. so that we have the exact prices. We verified it with the broker, live accounts, live money, real fills, real exits. And you must also have at least 3 trades that have been traded in the past so that we're looking at over a month. We're only going to look at trades that have the open and close at least 3 trades so that we're not looking at, hey, somebody got lucky. Anyways, so yeah, these are very accurate results of what the top people are doing. If we flip it to percentage, wow, that's crazy. Their buying power is probably off. That's what it is. I'll look into that. Yeah, 16%, 5%, 3%, 1.48%. Still, that's so good. Remember, if the average market return is 8% a year, and we divide that by 12, then 0.6% is the average. And so you guys are all double or more. So absolutely crushing it. Vera says, how can I set up my how can I stop my 112, start my 111, but still manage existing trade? Oh, yeah, great question. If you're trying to transfer bots, so let's say you want to go from a higher risk to a lower risk, typically you don't want to close out those trades. You want to keep them running because they still have a very high chance of making money. So you just want to get your profits worth. What you do is you turn off the bot. So you click on the power button and you make it red. What turning it red does, or turning a bot off does, is it just stops it from entering new trades. And what it does is it still manages the current trades. So what you would do is you would turn off the bot you want to stop using. That would stop it from entering new trades and continue to manage those. And then you would turn on the new bot, and then you would slowly have the old bot, the trades closing, and then you have the new bot slowly opening at the same time. And then you would transfer over. And then once you transferred over, they can either delete the bot or just keep it in the archive or something like that. There's, of course, my pleasure. My pleasure, my pleasure. All right. It looks like those are all the messages for now. Robert says, thanks, Austin. Love the weekly calls. Thank you, Robert. Thank you, Maria. I'm glad you guys are here. If it was just me, as always, it would be lonely. Oh, we got a question from Dale here. Dale says, what do you think about lowering the take profit target on the 111 to 20% during times where the market is just choppy sideways? I had some trades open since December that just can't get to the profit target. We probably could have opened and closed many new trades in that same time with a 20% target. Very good question. The easiest way is to back test it. So what we'll want to do, let's figure this out. Go to optional mega because I already have a 111 built up here. Where's the 111 back test? Just defined risk, futures bullish bot. Okay. Futures bullish bot. We need to modify this back test a little bit here. SPY doesn't matter what else that we do it on. Give it 10 years. It's fine. Starting funds, ignore margin requirements. Contracts per trade 1. Just making sure all this is normal. Weekly, okay, 50%. We'll set the stop loss to 300. And we'll run this one first, just because there should be a stop loss on this, so that we can just see what the baseline is with it as it is what it is. So we're going to want to run a back test, but at the same time, we're going to want to look at the futures and see over what periods is the market range bound. And so this is where back tests get tricky, because we have to figure out what mechanically, technically, rule set system defines range bounds so that we can use that. And so if we're pulling up, let's just say the market analysis indicator, what we could say is that anytime we're within this range in the green zone, we could define that as the time to trade range bound or a 20% take profit. We have to figure out what that zone is. So it's probably going to take a bit. But yeah, so as long as we're identifying like what that time zone is or what that time frame is, so that we can look at the back test historically and being like, okay, this is the period that we're looking at. And so we can ignore the rest. Because the truth is, when you decrease a take profit by that much, like it's more than 50%, you're really throwing off your success rate. And what I mean by that is your win rate will go up for sure, but the amount of credit / profit that you make per trade is going to dramatically go down. So your risk to reward compared to how much you make when you win and how much you lose when you lose is going to be crazy. And in these times, You're just going to have longer trades to hold on to. Typically, it's just the best option, but I can't say for certain it's not something I backtest. So we look here. What we want to look at is average per trade is $38 and our win rate is 92%, with our max loser being 2,000, max winner 339. Okay. All those numbers are good. Now let's take the same exact back test and put in a 20% and see how this runs. But yeah, so you are right in the assumption that, hey, if I only have a 20% take profit, this would have closed. Maria does bring up a good point. Like, hey, if you're not getting to the profit targets you want, like you can just close out that trade manually, being like, hey, I just want to lock in some profit right now, which is super easy to do and definitely recommended. So I am always going to be of the assumption that whatever rule was originally set for the bot, let it run, don't touch it. I don't care what type of market scenario we're in. It may not be performing as usual, but let the strategy play out. As option sellers, all we can do is play the numbers. And so what we do is we generate a back test. We look at the numbers. Is the numbers good? Is it acceptable to us? In general, all the bots inside of our options bot portfolio are great strategies and they work well together. Next, live trade. I have been live trading this with real money, real execution for the last 3 years almost. Again, it's only been about a year and a half for these specific bots, but like live trading, me putting them on myself, it was working. I was getting good fills, good executions, all that stuff. And so now with running bots, I know that it's back test. I know that it works long term. I know that it works in live trading. And so now my job is to let the bots run and do their thing. Right. So I don't want to touch it. So as Maria said, if you want to close out trades, go for it. You can just close out individual trades. Now, if we look here, my hypothesis was correct. We don't make as much money. So total profit goes down. You can see our average win per trade was at $38. Now it's 18. So we're losing $20 per trade, which is pretty significant, right? That's like a pay cut from 40 to 20. So we basically took a 50% pay cut in our average return per trade, which is quite a lot considering we're still taking the same amount of risk. You have to understand this trade takes a certain amount of a risk. And now we're just cutting our profit in half despite taking the same amount of risk. So there's really no reason to do that. If you want to close out trades, you can. Again, the advantage here is average days in trade drops dramatically, drops in half. So that pros and cons there. But yeah, your win rate goes up to 96%. Your profit drops. Your average winner drops, average loser the same, max winner drops, and then max loser also stays the same because you're not changing those. So really, it's up to you. But if you look at this long-term graph, you can see definitely more consistent in uptrending markets, but the losses just do way more damage than usual. Again, it's all up to you. It's your account, your bots. I would probably take Maria's idea as the best bet is let the bots play as they play. And as you get up to 20, 25% in markets that you're not too comfortable with, you can close out trades early. But I'm always of the assumption if you're running a bot, it's typically something that's worked in the past. So just play out the numbers, don't get involved. Robert says, totally agree. Let the bot run. In hindsight, a range bound market might have benefited a different bot, but you can't predict that you will be entering. Yeah, exactly. That's the hard part is like when we look in hindsight, it's like range bound market. We all should have been in biweekly rainmakers, profited from both selling calls and selling puts. But the truth is, you then look back, okay, what quantifies a range bound market? Like, and how certain are we that whatever we pick for a criteria for this is entering range bound will be the same every time? And it just gets very nuanced. And I think all these rules are where people get in trouble. In general, we have bullish trends. Those are categorized by going up, going down, going up, a little sideways, going up. Like both bearish and bullish markets have different micro cycles, right? There's different trends inside of it. And you could try to play off those micro trends, but my idea, look long term. There's a bullish or a more bullish movement, right? A more bearish movement. Create bots for those, let it ride, right? Anyway, it's not a bad idea, Dale. I don't want to play off of that. You could definitely do it. As you saw, it will cut your hold time in half. It will also cut your profit in half. But hey, that might work out if you want to go for it, because now that you cut your hold time in half, well, if you double the hold time to get back to a normal hold time, you also double the profits. You can roll over trades faster. But my personal opinion, where the risk comes in, is that you're taking the same amount of risk, about $8,000 per trade, and now you're making half that profit. So your return on risk is quite low. But hey, your call. Do what you want to do. In my opinion, if you change that, it would still work. You'd still be profitable, just not as profitable. Anyways, cool. Love the input, Maria and Gail and Robert. Thank you guys for sharing. Any other final questions before we go? Looks like the market's up 0.71% still, so not bad. Awesome, awesome. This is our weekly call. Thank you guys so much for being here. We do this at 12 p.m. Central Standard Time, 1 p.m. market time every single Wednesday. If you haven't, you know, I say if you haven't been here, you should, but you guys are here, so I can't say that. Anyways, I wish we could get all the Inner Circle members together, but I do love how consistent you guys are. It means the world to me to have consistent faces and know that you guys will be here when I show up. Thank you to the whole group here. And again, I'm just killing time by talking. For any final questions, so feel free to put that in there if you want. But thank you, Bobby, Dale, George, Callan, Maria, Robert, Scott, and Vera. Glad you guys are here and hope everything's going well. I will get those reports for your account to you soon. Robert says, see you in March. Crazy. March is a wild month. But yeah, next time we see you will be March. All right, guys, enjoy the rest of your week. Enjoy the rest of your day. If you have any questions, please shoot me a message on Discord or email, and I will respond as soon as I can. I will look forward to looking into Robert's issue, and yeah, see you guys soon.